Welcome. In this video, will Zbcn coin continue to rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we closely and patiently examine the chart, one of the most striking elements that stands out is the fact that the price has been showing an upward tendency for a certain period, steadily forming an ascending trend. This established trend is one of the most powerful visuals in technical analysis, indicating that the price is progressing healthily over time by making higher lows and higher highs. In this context, the current structure presents a scenario that investors should not overlook. In particular, this ascending trend line represents a strong technical level where the price may find support. Touches or approaches to this level at various times can serve as key turning points during the price's search for direction. Currently, we observe that the price is moving toward this trend line, and the probability of a touch is quite high. If this touch results positively, meaning the price finds support from the ascending trend line and turns back upward, this movement may strongly signal a healthy and sustainable uptrend. Ascending trends offer reliable clues to investors about the overall market direction. A price structure that settles within such a trend typically shows that buyers are in control and that demand pressure is stronger than supply. This implies that market sentiment is currently positive, and participants may have strong conviction that the price should test higher levels. From a technical perspective, the price approaching this trend line and bouncing upward also indicates that buyers view this level as a significant support zone and are inclined to initiate strong buy positions there. This suggests that the market still holds upward potential, and this potential may not be limited to a short-term reaction, but could evolve into a medium-term rally. The healthy maintenance of a trend line is closely tied not only to current price action, but also to volume support. If the price touches this ascending trend and gains upward momentum accompanied by high volume, this offers strong technical evidence that the uptrend could be a lasting and decisive rally rather than a temporary reaction. Such healthy upward movements also contribute to more controlled and balanced future corrections. This, in turn, strengthens confidence within the market and encourages new investors to enter. Moreover, the price respecting the trend line and reacting upward with every touch highlights the strength of the trend line and how seriously it is regarded by market participants. This shows that the trend line is not just a representation of past movement, but also a reference point, significant enough to potentially influence future price direction. In particular, the reactions observed during pullbacks to such ascending trend lines play a major role in understanding market dynamics. If the price touches this line and once again bounces upward, it indicates that the market carries strong upward momentum, not only technically, but also psychologically. These kinds of structures reinforce the perception of a buy-the-dip opportunity among investors and support a positive sentiment that sustains the uptrend. Additionally, the preservation of the ascending trend line can serve as a strong signal not only from a technical standpoint, but also when evaluated alongside fundamental analysis. The general macroeconomic structure of the market, sectoral developments, or company/news-specific factors may also increase attention to these technical levels. But we can't make decisions based solely on trends. Let's also take a look at other metrics. Stay tuned. When we take a careful and detailed look at the chart, a W pattern, known in technical analysis as a strong and reliable reversal formation, clearly reveals itself. This formation is typically seen after downtrends and is considered a classic structure that signals a potential shift in direction to the upside. At the moment, we can see this formation clearly taking shape, with the price positioned at the second bottom of the pattern. This area is critically important from a technical perspective and may serve as a key support zone that could mark the beginning of a potential upward movement. W formations generally consist of two bottoms and aim for an upward breakout following strong buying after the second bottom. One of the most striking aspects of this formation is how clearly it reflects investor psychology. During the initial drop, the market experiences some panic and selling pressure increases. However, the subsequent rise brings some recovery, and the price reacts upward. Then, a second decline brings the price back near the previous lows, but this time the selling pressure is more limited, and a new lower low is avoided. This indicates that selling pressure is fading while buyers are beginning to step in more assertively. This is exactly the situation we are currently observing. Upon examining the current structure on the chart, it is possible to say that the price is consolidating at the second bottom of the formation and may be preparing for an upward move. If the price transitions into buyer control from this point and starts a rise supported by volume, it will not only be a short-term bounce but also a confirmation of the formation. Such formation confirmations are significant technical events that increase investor confidence and often bring new buyers into the market. Furthermore, W formations tend to form in areas that have previously acted as strong support zones. Therefore, it is natural for buyers to be active in these regions. The level at which the price is currently positioned draws investor attention not only from a technical standpoint, but also psychologically. An upward movement from this zone could lead to the completion of the formation and the beginning of a significant upward trend. In this context, it can be expected that the price will rise from the second bottom and attempt to break through the neckline of the formation. This breakout would signal the technical completion of the pattern, and typically, the target following the breakout is projected upward by the depth of the formation. This means that if the price begins to rise steadily after the second bottom, it could mark the start of not just a brief increase, but a much larger upward move. One additional point to watch in such formations is whether the upward move is supported by volume. If the price increases alongside rising trading volume, this indicates strengthening buying pressure and growing investor confidence. These types of volume-backed rallies help the formation function more effectively and significantly increase the likelihood of reaching the target. W formations don't only provide short-term signals, they can also mark the beginning of medium to long-term uptrends. Especially after a deep and strong second bottom, an upward breakout shows that the market is aiming for higher levels, and that investors have a positive outlook for the price's future. These types of structures can also activate long-waiting investors and contribute to an overall positive sentiment in the market. The fact that the price is currently above the 200 EMA is considered a highly positive signal for investors. This indicates that prices are still in a strong uptrend. Buyers in the market have not yet relinquished control, and the overall market sentiment remains positive. Since the 200 EMA is perceived in technical analysis as a strong support area, the price staying above this average increases confidence in the continuation of the upward movement. First and foremost, prices trading above the 200 EMA show that the market is continuing to move strongly to the upside. As this moving average is calculated by taking the average of past prices, it reflects the general perception of market participants. If the price manages to stay above this average, it suggests that market players are still on the buying side and that selling is under control. In such a scenario, investor confidence in the market increases, and this wave of confidence attracts more buyers. This helps to strengthen and sustain the uptrend. When the 200 EMA is below the price, it is generally interpreted as a sign that the market is strong and buying interest is prevailing. However, if the price falls below it, it often signals a weakening market and increased selling pressure. In the current situation, with the price trading above the 200 EMA, it confirms that the market is in a healthy and sustainable uptrend. This means that investors continue to buy at current levels, a strong support area has formed, and the trend direction has been established as upward. From a technical perspective, the 200 EMA acting as a strong support line helps protect the price from sudden drops and aids in recovery. Prices just below this average are typically areas where buyers become active. When the price pulls back toward the 200 EMA, investors often view this as a buying opportunity, and the increased buying volume at this level pushes the price back upward. As such, the 200 EMA becomes not only an indicator, but also a psychological support level. This support level reveals that overall market sentiment is positive and that prices are expected to move upward in the medium to long term. We should keep following the 200 EMA. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.